Hey guys, Scott Davidson. I'm here today with Jason Reeves from Caliber Home Loans. And Jason's one of our preferred lenders. And so here's the deal. Coming in 2019, it's a brand new year. Jason and I were on the phone talking about, just kind of discussing what's going to change this year in the loan processing, what's changing in the real estate market. And so I just thought it'd be a really good idea to start the new year with people that are thinking about buying and selling. What do you need to know? And a lot of you guys have bought houses, I get that. But I mean, what do you need to know about 2019 that maybe is different from 2017 or 2016, the last time you bought a house? So we were just going to kind of go over a couple top items, not really make it a long video or anything crazy, but just kind of give you some highlights of what you need to know. And a lot of people out there have never bought a house, so they're going to look at this and go, okay, I didn't know that. So Jason, thanks for doing this.
Absolutely.
Obviously,
Thanks
we appreciate what you do for our team.
Sure.
We're a great team and collaboration together. I love that. Tell me kind of like, give me a rundown. Right now, we're mostly FHA in this area.
Mm-hmm.
I had heard FHA changed some of their standards.
Yeah, FHA loan limits did go up a little bit.
Okay.
Which is going to help in the upper 300s still to purchase FHA.
Okay. So what was it, like a 10% increase?
Yeah, something like that.
Okay. Well, that's huge, actually.
It does make a difference.
Because it covers most of this county. I mean, most of the houses in this county are under $400,000.
Right.
So that would cover most of them, which is huge.
Exactly.
Okay. Well, good. Did they change any of the criteria, or is it same criteria, just different limits?
Same criteria.
Okay.
Minimum credit score 580. Most government loans will go to a 580.
That's good to know.
USDA,
Okay.
VA, and FHA financing.
Okay. So obviously, when we have somebody we're talking about buying a house with, we tell them first things, like what are you looking for, and then have you been pre-approved. So obviously, that's when you get the phone call from us and
Sure.
whatnot. What are some of maybe the top 3 or 4 things that are just detrimental that they have to have in place?
Great question. Actually, the credit score is a big driving factor. So you have credit, income,
Right.
and assets are the big 3. But credit, it can go a lot of different ways. So a 670 or 680 credit score may not be as good as a 600 credit score as an overall credit profile. So the credit profile in general is going to be reviewed and looked at.
So score's one piece of it.
Right.
Tell me more on what you just said about the credit profile. So what else would affect that? They can have a 680, but
So if you have a late payment in the last 12 months,
okay.
Really going to look at the last 12 months specifically. Okay. Last 24 months, we're going to look at the whole profile, but those are going to be key factors.
Okay.
Bankruptcy or foreclosure or short sale, things like that can obviously make a major impact. The
Okay.
great news is I can still help a client with those life events,
Right.
credit events that have
Right.
happened, no matter when it happened actually.
So it's not a hard and fast rule that it's this many years after such and such. Are there some hard rules?
With traditional FHA and conventional financing, yes.
Okay.
So
and
there are time limits.
what's the simple rule on that?
Chapter 7 bankruptcy, 2 years for
Okay.
FHA financing,
Okay.
4 years for conventional financing.
Okay.
Chapter 13, you can actually be in a Chapter 13 and do FHA financing with approval.
Seriously.
It's crazy.
That is crazy.
But things happen. Life happens.
Right.
So it's a great, it's a great opportunity.
Okay,
for
so that's
somebody to
bankruptcies. What about foreclosures?
Foreclosures, FHA is going to be 3 years.
Yep.
Conventional is going to be 4 as a minimum. And if you have a bankruptcy with a foreclosure, that can twist things a little more even.
Okay. And there's like alternative programs out there, right? So like 2
Absolutely.
years or something like that, but it's really high interest rates.
It is different interest
Stuff like that.
different interest rates for sure, but it does fill the gap if you have somebody
Sure.
that's had a life event, credit event, what have you. Then we can actually help them a day out of bankruptcy, quite frankly.
My goodness, that's amazing.
Yes.
Okay, so we've got credit and we've got the whole profile with respect to like payments and on time and stuff like that.
Mm-hmm.
How about like income and debt ratios and stuff like that? How's that affect everything?
Definitely a factor. So 2 years employment is what we look for. For first-time home buyers, I'm working more and more with very young families.
Right.
And so we can actually count school and college as a part of their work history for
Okay.
a first-time home buyer.
Wow.
Sometimes we work with clients with no credit at all, so no credit scores at all. And we can work with that as well with either a non-occupant co-borrower, or we can create a alternative credit file for them. So utility bills, a rent history,
Okay.
things like that.
So what I heard was, Dad, can I borrow the money?
Right.
Or can you sign with me, co-sign with me?
Something like that.
Exactly. Okay. So let's see, we've got credit, we've got debt to income ratios, we've got on-time payments, employment, for typically 2 years, you said, right?
Right.
Anything else that just kind of comes off the top, like the major, those are the big rocks.
Sure.
Yeah.
Commission income, got to have a 2-year history. So
Okay.
if you do start a new job or you're self-employed,
I was going to say self-employed, there's a whole
gotta have
different
a
there.
2-year history.
Okay, huge. All right, well, is there anything else you can think of going in 2019 that kind of is going to throw a little bit of twist, or?
Really no major changes other
Okay.
than predictions are a little bit of a increase in interest rates are expected this year.
Right,
So
right.
we continue to see a pressure in rates. So I've been trying to encourage folks, which I'm sure you have as well, to
Do it now.
really
Do it now. It's not going down.
That's right.
It's not
It's
going
the right
down
time.
anytime soon, the next several years, I guarantee you.
Yeah.
Well, good.
So-
I hope that helped you guys and gives you a little bit of an overview on, just the simple start of how we look for houses and get pre-approved before we go. And the reason it's so important from the standpoint of when you're buying a house to do the pre-approval is because we get a lot of multiple offer situations still. And the sellers are asking us, look, have they been pre-qualified? Have they been pre-approved? And the difference is how deep the lender has gone into that in advance. It's really fantastic if you've got the entire file, the tax returns and everything already written and you're just waiting to fill in an address on a contract. That's the best and strongest scenario, because with the multiple offer situation, they don't want to take your offer because it looks the best, but then your buyer's really not that strong or hasn't gotten through the process yet. So it strengthens your offer by having done the homework ahead of time. So that's super important for you guys to realize. Like, we just had an offer yesterday. We had a house with 3 offers on it, and 2 are FHA, 1's conventional. And then we had another house actually where we had a VA and a conventional offer, and just for example, the VA is looked upon differently than the conventional. I'm not going to tell you which way, positive, negative, anything like that, but people look at it differently because the way the appraisals are done, the way the rules are in terms of the housing condition, the HUD minimums and stuff like that. So all those factors involving your loan do play out on even getting your offer accepted. So that's huge for you guys to know. If you have any questions, obviously give us a call. I'll put Jason's phone number on the screen as well, so you can give him a call directly. We hope that you'll reach out to us, let us help you. Even if it's just to answer some questions, that's what we're here for. And we hope you guys have a great day, and I want to thank you again for doing this with us.
Yeah, thanks, John.
All right, see ya.